Alright, let's take a look at the charts. It's testing this upper band of consolidation right here. We were looking at earlier, printed a bearish candlestick, and it looks like we're losing some momentum with the bearish price action. So, zoom in. This is a bearish engulfing on the hour. Right here, bearish, bearish. And then this is essentially engulfing this doji candle. So it looks like what I said like a few hours ago, that we were essentially going to hit this area, come down and consolidate. That looks to be exactly like what's happening. And essentially we just need the bulls to show up here, or at least support this area right here of this upper consolidation band for this trend line right here. Let's see. Super trend saying sell. Market cipher hasn't printed a bottom on the 1 hour. MACD looking a little bearish, but it looks like there's possible. It's trending towards the bullish side, and then these white lines indicate that it's possible trend reversal. MACD, RSI is trending a little underbought, but it's 43. We'd only be concerned at 30. Going on to the 4 hour. This is some massive bearish candlesticks right here. Again, the bulls really need to show up here and support this line of support. If this line gets broken, we could consolidate, and that seems to be the sentiment. Especially, you can see right here that the volume is trending downwards. So we want to see more volume pick up. And so the price action, you see the price action is moving down. You see it trending down right here on the 4 hour. You also see the volume trending down. Not only is it going down, but it's also trending down. And what you would do is you would draw this line right here, this trend line. You would take at the top of the candle right here, measure it to right here, and you can clearly see that it's in a downtrend. So you take this downtrend right here, compare it to here, and basically we're losing a lot of the momentum. And so the ability for the bulls to show up here, we just need the bulls to show up. There's not a lot of selling pressure, and the selling pressure seems to be trending down lower. So again, this is the major area that we want to see supported. Like I was talking about earlier, something that is a little bit concerning is usually when you have strong support on this line right here. Usually when the price action comes down into here and comes down into here, this is breaking this support line. But it looks like we haven't fallen through. But the validity for this support line is negated, essentially. Like, we're holding it and we could bounce, and that would be huge. And this, we don't have a candlestick body underneath of this, which would totally confirm this idea of it being negated. But let's see, take that out right here. We're gonna go down to the lower time frames. So that was the 4 hour. This is the 30-minute. And yeah, it's the same thing on the 30-minute. We need to see volume pick back up. We need to see this right here is a morning star formation. So, and they can be bullish or bearish. In this case, this is a bearish morning star formation followed by a bearish engulfing on the 30-minute. This could bring downside, and it looks like going off of a fractal idea, it looks like it slowly wicks down, and we could see a wick into this area and then another wick back up. There seems to be a lot of buying pressure at these levels right here, as indicated right here, so that could potentially be support. The main thing that we don't want to see is we don't want to see this price action right here. We don't want to see it go below 33,497, or essentially 33,500, because if it does that, then it's going to set a new lower low, and that's going to put us into a downtrend in the immediate short term, and we could be seeing a potential, because you see right here, you have the high, and then you have the lower high, and then you have the lower high, and you see that. And so essentially we do have a consolidation pattern right here, and you can figure that out. Like any textbook pattern, you have the low and then you have the higher low. So essentially we need to, in the immediate short term, we need to hold 33,500 so that we don't confirm this ginormous pattern as being into a downtrend. And if that is the case, then obviously we want to see volume, and we would start to draw a consolidation channel. Possibly you have this idea right here, and when I say idea, this is a double top formation, and all patterns are an idea until they've been broken with confirmation and volume, respectively. So you have this double top formation, but possibly right here, and then right here exactly where this red line is would be the neckline. And so if we were to potentially break this line right here, let me draw this right here. So potentially if we were to break 33,500, the measured move conservatively would be, we would start to look for this support line right here at 32,982 potentially. So that is definitely in play. If not a reversal and then something to negate that idea, a possible reversal would be, we delete this right here because you already got that idea. What you would do is you'd put the paintbrush tool, this right here, go right here. And so essentially you would come in, this is coming down from the bottom, from the top to the bottom, which would be textbook, and then you have this, and that would be the first bottom. This would essentially be the second bottom, and then this could be the third bottom right here before potentially a W formation. Now you could also look at it this way. So this would be like a triple bottom or a double bottom essentially, but the better way to look at it would be you have this ginormous bottom right here, and then this ginormous bottom right here, and then essentially if we were to reverse right here, it would be a double bottom. So we're really looking for the neckline either to break right here. If it breaks this price action right here, this confirms the double bottom, and then as we talked about before, the double top potentially playing out if it breaks this neckline right here, which is this red. And it looks like we're breaking it looks like we're breaking 33,500. Yeah, so that's going to be bearish in the short term if it can't hold this. And it looks like we did just trend on the volume and set in the immediate short term, we just had higher selling pressure. So it looks like that is going to break. And so this is the measured move, and then this is a major support line. So essentially we're just looking at this area right here for support, and then this idea right here would be a resistance idea right here, so or support idea right here. So essentially you would have support right here, come down, support right here, come down, break the support, come down to this area right here, find support at this level potentially, and then support flipped resistance, and this would potentially be our resistance area. So we're looking between these lines right now. It looks like it just wicked, so it might just need a little bit more to break that lower low. But again, volume's trending, so, and it's hard to see. Let me zoom in. The selling pressure is higher. The selling pressure is higher than the buying pressure. So yeah, essentially we're looking at those two levels. This is a doji that is printing off of a bullish engulfing, or a bearish engulfing. So you have this right here, and then essentially you have this right here, which is, so this candlestick is engulfing the previous candlestick. So it's a bearish engulfing. This looks like a doji, although you would want the body, the candlestick body, to be a little bit smaller. This idea still represents indecision. But when we go to the volume, we can see that the selling pressure seems to be more significant than the buying pressure, and so that should negate that idea. And then obviously on the MACD, we were possibly reversing out of a trend, and it looks like it just ticked back up, that we're starting to trend higher and higher into a bearish trend right here. And that's on the 30. Could be a long squeeze, although this is a lot of buying pressure comparative to the selling pressure. But yeah, I mean, it looks like it just barely didn't hit it. Looks like it just barely found support like at the last second. And then yeah, so we have those ideas that we're looking at. So potentially if it does come up here and it breaks this line right here, that would be the neckline to validate this double bottom. And then textbook, how you would write it is like, if you were to try and show this in like a trading group, you would draw it like this. You'd go, this is the first bottom, this is the second bottom, and then maybe you write low. You'd maybe write low right here, put an L, and then possibly LL for lower low. And then this right here looks like a channel going down, and then that was possibly broken right here, and then a continuation of that downtrend clearly. And then so right now we're basically looking for, this is on the 15. That candlestick's starting to look pretty bullish. And it looks like we could possibly be reversing out of this idea again, like this fractal idea where we wick, have a lot of buying pressure, continue up, which is a very risky trading strategy where essentially the longs are looking at this potential area right here to enter in at the top of this consolidation pattern. So essentially the price action comes down, and textbook, what you would look for right here is you would look for, you know, a bounce right here at this level, and then once you get the confirmation of the bounce, when you get a candlestick above, closing above this level right here, and then you get the confirmation followed by volume, which we have neither, then essentially you would consider this to be a bullish retest of this support area right here, and you would potentially enter into a more conservative long position right here. Now we don't have the confirmation on the volume or on the candlestick close, and so people are being pretty risky longing it right here, driving the price up. And again, it looks like it was a long squeeze, like what I was talking about earlier. This is massively bearish. And then this is like a shooting star, almost like a gravestone doji. Shooting star, yeah. And then yeah, we're just looking for this level right here to break. And that was just a long squeeze like what I was saying earlier. But we want to play the potential out for both of these because we want to really look at the charts to figure out what's going on instead of drawing our own conclusions. So I'm going to take this out. This is a double bottom idea. And then what you would do, I already showed you the idea for the double top. It's so close. And the fact that this candlestick printed basically, and I mean, yeah, we just need one more candlestick close, and then that should drive the price down. Once we get a bearish, yeah, there we go. And then essentially we're looking for this area right here as our measured move. So we're looking for support right here. Obviously, you know, if we wick down here and then come back up and then continue to go down to that potential support area, that just has to do with longers and stuff taking profits. But it's looking pretty good. Yeah, see exactly. And then essentially, like I said before, you have this area right here, which is potentially support. Then you come up, support, then you come down, support, and then essentially we would be potentially looking at a bounce at this blue line right here, which is a potential support area, and then hit this support as resistance and then continue down lower. So the main level that we're really looking at right now is this gray line right here and this blue line right here, and until one of them is broken, we just don't have all the answers. But it is looking significantly more bearish, especially as the candlesticks start to close. Again, as a trader, what you look for is on the 1 hour, you can trade it off the 1 hour, but it's very risky. But essentially the 4 hours is the real confirmation. If we can get a 4-hour candlestick closing below this consolidation pattern, essentially that would be bearish. And then to further that, we would want to see an increase in volume like what we're seeing right now towards the downside. And that would be very bearish for potentially breaking back into this consolidation pattern, if not invalidating it and forming it more into something like a falling wedge idea. Let's go on to the 4-hour. So yeah, I mean, this is the idea that we're looking at, is we clearly broke through this consolidation pattern that we were monitoring for a few days. Alright, so we broke that. And then essentially what we would be looking at, so this pattern seems to start being invalidated. You can't just break in, break out, break in, break out. Eventually it just invalidates the pattern. And we're looking more so, you have this support line right here, which is this green line right here, which would be the bottom. And then essentially this blue line right here would be, this darker blue line right here would be the top of this essentially falling wedge. And so, you know, and then there's obviously the validation touch points right here. A slight, you know, break above it, that's no problem at all. The pattern's still valid, and it looks like we could be looking for something like this, where we move into, you know, these triangle patterns, you know, still have validity, but because they are trend touch points, and it does show the trend and the touch points of the trend, and basically potential support resistance zones. So again, this downside could become significantly more viable if we get a candle close. Like if we get at least a 4-hour candle close, or at least a 1 hour, but we would want to see, like, as a professional trader, you want to see at least a 4-hour candlestick close as the start to a confirmation. And then again, you want to see volume, and we are starting to see that, not on the higher time frames but on the lower, and the lower time frames do start the trends for the higher time frames, which are obviously more significant. So another thing that we can look at, you know, as a trader, is you would pull out your Fibonacci retracement. I wouldn't do trend based, I would do just the standard retracement, because essentially these are a great way to find out blow off tops and possible trend reversals, is what we would be using it in this case for. And it looks like it is well into, let's see, it doesn't look like out of this in the immediate short term that there's any chance of reversing according to this Fibonacci. Potentially we would need to hold this line to potentially move higher up if we were just in some kind of high volatility consolidation. This would nearly invalidate this entire move right here of positive price action, and this is the Elon Musk candlestick. And so for that, giant move to be invalidated, essentially what you would have to do is you'd have to break this area right here, what we're looking at. So this is going to be a massive area, and again, we have this idea. So not only do we have the 0.382 level, which is 32,921, which we're looking at for both the measured move that we calculated, and for the double top that we measured. But not only that, but we also have this idea right here previously, where you come up, there's support, and then essentially this idea is where you come up and you have resistance, come down, you find support, resistance, support, and so it's a support flipped resistance idea on this level right here potentially. On top of this Fibonacci retracement area, on top of this measured move, which is a double bottom. So this is an extremely important level that we're looking at right now for potential support. And when you come in hot like this, especially if you get a candle close like this is going to be a massive candlestick close. If we do, potentially we could wick it if there's this much selling pressure, essentially, like, it's overextended on the RSIs, it exacerbates the RSIs. We hit it really quick and then we wick right back up, which seems to be what's going to happen. The other case would be we close this 4-hour candlestick on like a massive bearish engulfing, essentially the idea, but not actually the textbook pattern of bearish engulfing, but just this massive candlestick idea, which kind of speaks to the fact that there's a lot of selling pressure in the market. And so yeah, those are really the two ideas. Is we could wick it really quick, is what we look like we could be doing, and then come back up and then close the candlestick and start consolidating back up, or we could continue to go down, hit a close on like the hourly or something like that, which is probably what we would be looking at right now. And if we hit a close on the hourly like this, but another close like that, essentially that would be massively bearish and probably break the support line right here, which is absolutely critical to the integrity of this uptrend that we're looking at right now. So let's see. We got that 30-minute close. That's big. That's bearish. We got this three black crows pattern potentially playing out on the 30-minute relative significance. Again, it doesn't confirm until this candlestick closes, and this is, obviously this candlestick is showing significant selling pressure. So a close on that candlestick would be massive. Massively, for it'd be massive for the shorts, and then for the longs it would be nearly devastating. We want to see a wick, and we want to see a clear rejection. If not, this could get, there's always those scary wicks, but you usually don't trade based off those scary wicks. Essentially what we could do is we could come down and then basically at an arbitrary, substantially arbitrary moving average or something, find support. But just looking at the TA, this would just be massively bearish in and of itself if we can't hold this support level right here. And it looks like we are trending down lower on volume, but we're going to go to 15. Okay, 15. And for a lot of traders, they'll only look at the 4-hour, but for some of the day traders type deal, they'll look at the 15 to the 5-minute, and they won't go any lower. It looks like we hit this measured move, and it looks like we could So what we would do right here is we're going to pull up two Fibonacci. So we have this Fibonacci right here, which is a Fibonacci retracement. But what we're going to do is we're going to pull out a trend-based Fibonacci. So you'd grab this Fibonacci right here. Okay, it's perfectly hitting it. We'll see what happens. But either way, we need to grab this fib for... Okay, so you'd grab this like this. Take that. And we'll just do the immediate short term. Let's see. So this is on the 15, so you go the hour. Then you grab this trend based. So this is a little bit different than the fib that we're using right now, which is Fibonacci retracement. So essentially you'd grab something like this, which would be the swing high, swing low in the immediate short term, and it's just looking very bearish. Essentially you would want to see something like this right here, which is the golden pocket area, and then the fact that it didn't hold is take this right here, put that right there, swing high, swing low always. Some people do candle bodies, but that's not really, in my opinion, swing high to swing low measuring. I mean, and like in my opinion is in like it's just, that just does not seem to be. Yeah, so I mean, no matter how you measure it, we need to come up to this level right here of 34,231. It looks like we could be potentially breaking this massive support level. You see that it's perfectly hitting that Fibonacci area. Perfectly. In the short term, finding support on it, a massive idea is going to be closing this candlestick. The higher up this candlestick goes before it closes, like the better it is for potentially finding support on this candlestick. If we close below this move right here, I mean, it's pretty much just like very, very bearish. Okay, we're going to go back to the 15, and then we're also going to get the Bollinger Bands, because those, while they tend not to be respected in high volatility situations, the volatility is pretty relative to, it's relatively low volatility for the situation we're in right now. Okay, so these are the Bollinger Bands. It's out of the Bollinger Bands right now, so it could potentially respect these bands by going up and then continuing lower. That's definitely a possibility, but we are overextended on the Bollinger Bands. MACD is trending bearish, so that would be in the immediate short term an idea that we come back up, find support on the Bollinger Bands before continuing lower. And then you can see that, you know, this is what we were talking about earlier with the 30, and we're right next to an official oversold section on the RSI. Can't draw your own conclusion. So it's not necessarily that I can't draw my own conclusion. It's that we want to look to see what's going on with the charts. So I'm looking at the charts to find the information instead of like um like looking at like I'm not using my own biased opinions. I'm reading the charts to figure out what's going to happen. A lot of trading is if-then situations, and we have to have enough information on the charts to figure out what's going on. So, for example, if this area right here breaks, then that is massively bearish. If then we also get a candlestick close on the 1 hour, which would be bearish, then essentially we would continue lower. But if we continue to consolidate in this level, close a hourly to 4 hour candlestick above this level, that would be massively bullish. And if we were followed by a support on volume, then that would be bullish. So it's not necessarily that I can't draw conclusions. No technical analyst on the entire planet can predict the future that I'm aware of. But so essentially, we're just reading the charts, and I'm not going to draw any conclusions just because I don't think that it would be relatively fair to and for you guys to hear my opinions on the charts when the validity of the channel is so new. Like, yes, we do have 100% accuracy and like all the trades, and we've called Cardano on this channel and it's pumped. We've called the top on Polkadot. We've called the bottom on Polkadot. Like, we on this channel, like specifically, like even like when I was early on stocks, I called 100% ROI on oil, saying that it was going to be one of the most massive, substantial investments, and it was. And I think I made like 140% ROI, and I've made a 45-minute video talking about oil and how my opinions on it were in the different stocks and ExxonMobil, and against all the popular opinions, we were right on that. So like I mean, I do have 100% accuracy, and I am very, very um, conclusive with my information. But what I would say right now is, we only have so much information, and we're just looking for more information to draw relative conclusions. Like for right now, I just told you guys about this measured move right here, and it played out. I told you guys if it breaks this neckline right here, then you have this measured move that will play out if it's supported by volume. And that's exactly what happened. So we're just waiting on the charts. Potentially we'll find support right here, that would be bullish. Volume picks it up, that would be bullish. The thing is that we set this lower. We're technically in a downtrend right now, and the market just seems to be having a difficult time with. And when I say we seem to be in a downtrend, we are in a downtrend. I just can't draw a consolidation pattern on it because there isn't really anything clear right now. But obviously, it's textbook. You have the high, lower high, lower high, and then you have the low, lower low, higher low, lower low, lower low. Very obvious downtrend. So the trend is your friend until it ends. If you read any trading textbook, that's what they all say. And so we are expecting. And on the MACD oscillator, we are bearish, trending bearish on the 15. Potential top, potential bottom was entirely negated. Again, you have to take market cipher on the 15 with relative validity. The fact that it can't measure these measured moves it didn't know. That's why you have a technical analyst like myself to tell you about these measured moves and measure them, so that an oscillator can't measure that. So yeah, we're just looking at the charts trying to figure it out. Let's see. So on the 5 minute we got a bounce, which is again, it's the 5 minute, so this is substantial relatively to the 5 minute, but um, it's a good start. But we want to see something on the 4 hour to 1 hour candlestick close to see about this support area. And then again, the areas that we're watching right now are, I mean, we just broke this area, which is massive. It's hard to see, but this area right here, this trend line right here. And so if we were to potentially find this area as support, then we would come up and test this trend line again for potential resistance. The next that we'd be looking at is again this idea of, where is it? Right here, you potentially have this idea of support, 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 and this trend line or level has been tested 3 times and held up for support, and potential resistance. So potentially it would be a textbook like potential support resistance flip if we were to come up to these levels potentially and test this area right here as resistance flipped support, or support flipped resistance. So right here, if the price action was to come up, this would potentially be an area. And then it looks like this is a Fibonacci retracement level on top of it. And again, when multiple different, mainly in the markets, what we look for is we look for Fibonacci retracement areas, we look for moving averages, we look for trend lines, and we look for previous price action to dictate where potential support areas are going to be on the market. And when you have multiple of those potential support areas lining up against each other, obviously that makes it a lot stronger. So we potentially have that support resistance area on top of the 0.5 Fibonacci retracement area, which is at 34,014. So those are the levels that we're looking at right now in the immediate short term to dictate the future price action. And we really need those answers before we can get anything conclusive. Obviously, a 4 hour close below that major trend line, if I was in a trade, I would be closing, deleveraging my position, because essentially that would be a bearish indicator. And the charts would essentially be bearish, so I would want to be closing a little bit of my position to deleverage that risk that would be associated with a continuation of negative price action. And then if we were to potentially find this as support, which looks to right in the immediate short term be the case, and we were supported by volume and some buying pressure, and we were to get above this level that we were talking about right here, which is potential resistance, and this level right here, which we were talking about, is potential resistance, then essentially if you're confident and the volume is supporting it, potentially you could look to add to your position if the charts really seem to be going in the favor. So I mean, we can conclusively draw evidence from here, but like we always say on this channel, you always want to long from a position of power. You never want to force a long. You never want to just get into a long, try and day trade all day. And if you read any textbook pattern, it's like on the top of a consolidation triangle, you trade the breakout with the confirmation followed by volume. And we don't have any consolidation breakouts right now. We don't have any patterns that we're essentially looking at. And as a trader, you want to make sure that you're looking at patterns specifically to trade, and make sure that you're getting that 3-to-1 risk reward ratio. So the trading odds are in your favor. And we can't set something like that up with something like this and make it official. So we do have conclusive evidence on this so far, but the future of the price action, it's all probabilities right now. Based off of how this support line is holding up, is potentially what we're looking at right now. And so we'll go to the 1 minute, and then we'll just look at the trending volume, because it just seems to be a fight between the bulls and the bears right now. And the trend, let's see, put this in right here, zoom in. So this is a consolidation essentially. Yes, the price action is moving down. It moved up, now it's moving down. Essentially, it could move up again, find support. But you do have this trending volume down right here. And this is the selling pressure, and the selling pressure is trending down, indicating no significant yeah, this is massive right here. So we're just looking to see how the market interacts with this support and resistance, and that's really going to tell us a lot of answers. Again, if it goes down below this level, it's more bearish. If it goes down, and on the macro time frames, we did breach that consolidation we did breach that consolidation. We breached the consolidation trend line, the upper trend line, which is bearish. We also are in the midterm, we are in a downtrend. It looks like we just set a lower low. And then it looks like we just breached that support line right there. So when you look at the macro charts, when you look at the midterm charts, and when you look at the smaller time frame charts, they all seem to be trending. Well, they all are trending bearish. So until we find the support line, which is obviously not these levels, but they all obviously, like I keep saying, like, because it's extremely important, you gotta confirm it with a close on the 1 to 4 hour. But essentially, we have this downtrend right here, and then obviously, so everything's bearish right now. And essentially, what we're doing right now at this point is we can close this Fibonacci, because essentially we were looking at this Fibonacci trend base to figure out if we were going to potentially head back up, but that doesn't look to be the case anymore. So you could close this right here. That makes the charts a little bit clearer. And now we're looking for our next support level, which could be, these are more macro Fibonacci areas. It could be this Fibonacci retracement area right around 31,580 potentially. Yeah, you see that right there. I mean, it's not written in stone yet because we could wick, but as soon as we do get those confirmation closes, it is definitely bearish. And it is bearish now, but then it just adds to the bearish validity if we do get those confirmation closes. And then even more, it would be even more bearish with volume following that. Let's see. MACD on the hourly looked like a possible reversal of the trend, and then we got that tick higher. So I mean, it's a downtrend on every single. It's a downtrend on the oscillator of the MACD, which is obviously massive, and then it's a downtrend on the price action, which is also massive. And again, the trend is your friend until the end. So until we essentially break those levels that we were looking at earlier, we have to assume that the price action is going to continue to go down. Although on the higher time frame, on the 4 hour, it is technically a bull trend, but it is massively looking like a reversal. You do have this trend down, and then on top of that trend down, you have this right here, these two lines, and the closer together these two lines become, the more possibility of a trend reversal becomes. When these two lines touch together, that indicates an immediate possibility of a trend reversal, and then when they finally cross, that represents the trend reversal. And so you can clearly see that, not only through this right here, but also right here, you have these lines that are constantly moving closer and closer together, which signifies trend reversal, not only with the white lines, also the same thing, they're saying the same thing, possible trend reversal on the higher time frames. And if that is the case, MACD is a lead, or it is a lagging indicator. So there's multiple different types of indicators. There's lead indicators, and there's lagging indicators, and MACD is a lagging indicator, which means that, and moving average crosses tend to be lagging indicators also. And essentially you have the move, and then like you would have these cross, and then potentially there could be further downside to confirm that trend. But this is more so a trend confirmation than anything else, because like I said, like it's lagging against the market, and so it's not telling of the immediate short term, and it is slower to react. Let's see, saying that this is a potential bottom. It's on the daily. It's crazy. So it's saying right here this was a bottom. And I mean, this is massive green candlestick. So essentially what we would do is we would go to something substantial like the daily. We would pull this out, which shows a massive amount of moving averages and substantial moving averages, and this is the daily. And then we would potentially look, okay, so we have a massive moving average right here, and it's on the daily, so it's obviously significant. So we could hit something like 32,438 essentially. Price action comes down, potentially finds support at this area right here, and then continues higher. Well, we want to find some sort of support area in the immediate short term, because you say, well, is the blue still in play? If we get a confirmation close above the blue line, that would be relatively significant, but if we get a close below it, like that's just like as bearish as it gets without a supportive volume, and we would essentially be looking for like 32,418 as potential support, or we would potentially be looking at something like 32,000, which was what we were looking at before, as a potential support area. And then this is obviously massive support around 30,000 but we gotta take it level by level. Alright, let's go to the hour, let's go to the 15, let's see if we're getting any closes. We haven't got any closes on the 15, so while it is bearish that it didn't hit that the support didn't hold, there's no confirmation closes on this line right here. So that area is technically what we're still looking at right here in the immediate short term. And this is a massive hammer like formation, where essentially this could be a trend reversal. It says, okay, the price action comes down here and there's so much buying incentive that it wicks all the way back up. So I mean, that's massive. Potentially, I mean, it's on the 15, so it's not as significant as something that would be like on the hourly chart. Nobody goes on the 45-minute. Hourly. Okay, yeah, that's pretty big. So essentially you do have a close right here on the 30-minute. So the market does the market does consider the 30-minute confirmation close. It's not substantial as the 1 hour or the 4 hour, but we did get this bearish close, which is, signifying that market, potentially, like, so essentially if you have a 1 hour or a 4 hour, which we haven't had yet, close below this support area right here, then it's confirming that we've broken this support. Oh, we just had another 30-minute close. That should mean the hourly just closed, which could be bearish. Let's see. Yeah, that's massive. It's bearish. So essentially we do have the hourly close that did just confirm we broke this upper consolidation triangle area right there. And then essentially we just want to see a confirmation on the 4-hour to make it massively bearish. And then essentially we're looking at this area right here as potential. It already is not support, as in like it already got broken by support, so it's not support anymore, but it still would be bullish to have this wick. And then if we were to close a 4-hour above this and hold above this, we could still see a reversal. Alright guys, so that is the price action. That's what's going on in the charts right now. I'm gonna head out for tonight, or I'm gonna head out for a little bit, probably come back later, but I pretty much gave you the rundown scenario, levels to be looking at, you know, what's going on with this price action, and we will continue in like maybe 2 or 3 hours. I just don't want to run my voice out.